Well, good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. The government looks to raise almost 15,000 crores by selling 9% stake in Coal India. The offer for sale opens for subscription today. The US drug regulator raises 8 observations at Dr. Reddy's Duvada plant. This means the resolution of warning letter is still some time away. Heavyweights Tata Motors, Larsen & Toubro and Vedanta will come out with their quarterly numbers today. In general news, the air pollution watchdog in Delhi recommends taking all private vehicles off the road if the situation worsens in the national capital region. And then, of course, we'll watch out for what happens to the IT names as a result of what Tech Mahindra's numbers and Cognizant numbers look like as well. So a bunch of names to watch out for. But let's first take a look at the trade setup for the day. It looks like a good start to the trading day today because the world markets had a fairly decent day in trade yesterday. The US markets ended reasonably okay for themselves, about 1.5%. Good bounce there for the Nasdaq as well, about 111 odd points. And that's showing in the way the rest of the world is doing too. So the Asian markets have started off with a bit of a bang, 1.5% for the Nikkei, about 1% for the Shanghai and the Hang Seng markets as well. Kospi 2 in the green and the SGX Nifty indicating a start. Rather subdued right now, but you never know. Remember, this week has been rather good for the Indian markets. We weathered the storm fairly well yesterday. We had a very good Monday, and we might have a start marginally in the green. Frankly, even the world markets too are trading at key support levels. So even on a technical perspective, a lot of it's not just the Indian markets bouncing off certain key moving averages, but the world markets as well. This is the S&P correction. You can argue that it's a cusp of the correction, but if you just look at the RSI levels at the second panel at the bottom of your screen, you will see that it looks a bit oversold, hinting towards the oversold territory. So let's wait and watch what happens there as well. However, for our markets, yesterday's session, mild bit of long unwinding that we saw, both for the Nifty, not so much for the Nifty, but maybe the Nifty Bank, a bit of OI pull back, and that mild bit of unwinding that we saw in trade yesterday. But very interestingly, after a long time, I'm seeing the ranges slightly altered from the 10,000 to 11,000 because the max OI for the November series at the 10,700 call, and for the on the put side 10,000. So the base remains 10,000. On the upside, some bets, odd bets at around 10,700 are being taken as well. So it should be interesting to see what happens in the near term. The only thing that hasn't changed are fund flows. So FIs continue to sell. Remember the last 2 days, while the markets have looked marginally okay, we have had some large sell numbers northwards of 2,000 crores day before yesterday, about 1,600 crores in trade yesterday as well. So the fund flow situation continues to go lower, and as a result of that, the rupee too is on track for having the longest losing streak since October 2001. This has been what, 7 or 8 months, if I'm not wrong, that the rupee has been on a losing streak. And if the rupee doesn't recover meaningfully today, which is from the looks of it might not, we might have the rupee having a long losing streak, or having the longest losing streak since October 2001. Crude has fallen marginally, though I don't know if all of that helps a little bit in the session today. Let's wait and watch. However, stocks that you should monitor and keep firmly in the top of your mind, at the back of your mind and open today. Firstly, Tech Mahindra, margin beat estimates. The results were slightly, you could say a slight beat if at all. That's actually what the story on Bloomberg Quint says as well. But 3.5% in trade yesterday itself. Let's see if there is more in store. Keep in mind, Cognizant numbers, well, a ho-hum set of numbers, guidance lowered marginally. So let's see what happens to Nifty IT in the session today. Pidilite, I thought, was a rather weak quarter. Revenues were up 15%, but margins came off. The expectations were about 22.9% on the EBITDA margin front, and they've delivered about 20.8%. So it's not something that will please the street too much. I think the raw material cost, I was reading Yash's mail, the raw material cost as a percentage of net sales jumped to about 46% versus 36% earlier. All of that led to these numbers not looking all that great, especially in the margin front. Let's wait and watch if Pidilite reacts negatively. A strong set of numbers by 2 or 3 players. So Teamlease, Cummins, Container Corp, all 3 came out with a reasonable, actually for almost all of them, very good set of numbers. Concor as well, margins at 27.7% versus 21.6%. So some strong numbers on the margin front as well, delivered by all 3, better than estimates. All likelihood they will react positively today. And something that you should keep at the back of your mind, no news really, but MCX, the NSE board meet today, I presume, to keep, and that will keep the stock in focus. While MCX, when they released the board meet, didn't talk anything about any possibilities of any merger whatsoever, but you never know. if the NSE board meet has some comments about this. So they should keep MCX as a stock in focus today. The board meet is of National Stock Exchange and not of MCX. Keep that in mind. However, let's try and tell you what's lined up on First Word today. Coal India offer for sale can push the government closer to its divestment targets ever so marginally. Sajid Mangat tells us what's on offer and what it would mean for the divestment target as well. 1% Beverages second quarter earnings have thrown up some red flags. Darshan Mehta takes a closer look at the accounts. Falling JLR sales may push Tata Motors into losses. Yatin Mota has put together what the analysts are estimating, and even in the middle of the market rout, 5 stocks have a 100% buy rating. Sumit Sarkar will join in with that list. However, let's start with the first story. The government is looking to garner close to 15,000 crores through a second offer for sale in Coal India, one of the world's largest miners. It has been a listed entity for more than nearly a decade now. The government is being cautious, though, with only 3% being put up for sale initially and a green shoe option of 6%. Sajid Mangat is here to take us through the details. And Sajid, must say, the government is being quite brave / adventurous to come out with an offer like this at a time when the markets are so volatile.
Not only volatile, but it's expected to be even more volatile in the next 1 or 2 days, as we hear news about the government and the RBI clashes, and government invoking Section 7, which means that the government will now direct the RBI governor to act on certain matters where it deems fit in public interest. So that's something which will keep the markets on tenterhooks, and that will also bring in a lot of volatility. I'm not sure under such a circumstances you will see big institutions or foreign institutions coming in here. Anyways, Coal India's public offer for sale is not at the highest valuation. It's coming. It has lost from nearly I would say 40-50% from the peak. If you look at 2015, when it raised to it divested 10% of stake, it was for some 22,000 crores. Now 9% is coming for roughly around 15,000 crores or so. So the valuation has come off the highs. The best thing is that 3% is what the government is offering, and 6% is the additional green shoe option which the government has in case it gets the oversubscription. And that's a very optimistic statement to say, because normally we expect Coal India to be taken off, but in volatile times you don't know. And the green shoe is nearly 2 times the offer for sale which is coming in. So that's a questionable thing of how much of institutions are going to subscribe to it. It's open today and tomorrow. Tomorrow I think retail investors are expected are allowed to invest. Today it's for the institutions. In total, the government has taken roughly around 55,000 crores from Coal India through various divestment proceeds, which is buyback or offer for sale, IPO. This is the second of OFS which is coming in for Coal India. And if you put the entire thing in perspective, so far, government has raised somewhere around 10,000 odd crores in divestment. They have 80,000 crore target to meet. If they have to meet that, they have to go aggressively, and you don't have much time because you just have nearly 5 months left. And markets being in such a volatile thing, many of the metals and mining companies may not be able to come to the market and raise money. So the best option available for them is companies like Coal India, where they can do it. And government is also looking at the buyback route. So you have a lot of companies lined up for buyback, public sector companies, and so they are going to raise a good amount of money from buyback as well in the next couple of months, because all those are pending approval from SEBI.
Well, let's wait and watch what happens there. But Sajid, thanks for putting that into perspective. And viewers, keep in mind, I know Sajid just mentioned about this as well, about the Section 7. Until the news gets confirmed, we'll refrain from talking too much about it. Let it happen, and then we'll try and talk about and get in market experts if it happens in the first place. So nothing until then on Bloomberg Quint at least. But Sajid, thanks for putting all of that into perspective. Well, the next set of news. The equities rout has also forced analysts to revise their targets rather drastically. Only 5 of the 185 Indian stocks that have 15 or more analysts tracking them have a 100% buy call from all of those analysts tracking them. So which are these counters, and what's keeping analysts rooting for them? Sajid's here, rather Sumit's here with the answer. Sumit, good morning.
Good morning, Neeraj. So if you see, what we have done is we have considered companies that have analyst recommendation of more than 15, so that we could filter those companies that are widely tracked. And so we get nearly 185 companies which have analyst recommendations of more than 15 in India. And the second filter that we applied was all the analysts tracking the company having a buy rating, that is 100% buy rating. And we get only 5 companies in this list. M&M, 2 life insurance companies, ICICI Prudential and SBI Life Insurance, and 2 construction companies, that is Ashoka Buildcon and Ahluwalia Contracts. Now if you see, the first on the list is M&M. Now 44 analysts are tracking these companies. The return potential is 39.3%, and if you see the ANR page on the Bloomberg for M&M, the return potential is 39%, but in the last 12 months it has given a return of not 12%. Now analysts are bullish on M&M on the back of a strong rural recovery which would aid tractor and CV sales, and also on the back of a turnaround seen in its loss-making two-wheeler and truck business. And on the back of this, 44 analysts are tracking, and all of them have a buy rating. Now you would be surprised to know that M&M is not only in India but also in the world the most preferred stock. Now none other stock in the world have 44 analysts tracking them, and all of them having a buy rating. So most analysts are bullish, and very bullishness and seen in the M&M stock. If you see the second stock, that is ICICI Prudential. Now 25 analysts are tracking the company. All of them have a buy rating, and if you see the ANR page, now the return potential is 43% on ICICI Prudential for this. Now it's on the back of the strong distribution network, robust growth outlook, strong persistency ratios that ICICI Prudential has been giving, and because of an improving mix of its protection business, which have kept analysts bullish on ICICI Prudential. But in the last 12 months, if you see, the stock has declined nearly 19% on the back of the fall in market share seen in the insurance business, volatility in the equity markets, which pose a risk for the ULIPs, which has a great percentage of share in ICICI Prudential's book, and also because of rising interest rate, and that's the reason why the stock has fallen 19%. Now third on the list is another insurance company, that is SBI Life. Now 21 buy ratings for this company. Return potential is 37%. Now analysts are bullish on SBI Life on the back of its access to parent, that is SBI Life's more than 22,000 bank branches, its diversified customer book, and also on the back of it's lower than industry cost averages. Now if you see in the last 12 months, similar to ICICI Prudential, the stock has given a negative return of 15%. Now this is on the back of the recent issues related to the asset book risk, and also because of the tightening liquidity in the bond market, and that's the reason why the stock has given a 15% negative return in the last 12 months. However, analysts continue to remain bullish on this stock also. Now third on the list is a construction company, that is Ashoka Buildcon. Now if you see, 22 analysts track this stock. All of them have a buy rating. The return potential on the stock is 76%. Now this is on the back of its strong balance sheet, financial closure of all of its HAM projects, strong order book, and lower valuations. But similar to SBI Life and ICICI Prudential, the stock has declined 22% in the last 12 months. Now this is because of recent issues related to land acquisition, because of rising interest rates, upcoming election season, and because of selling pressure seen in general among all infra stocks, and that's the reason why it has declined nearly 22%. The last on the list is Ahluwalia Contracts. Now 17 analysts tracking these companies have a buy rating. Return potential is 56%. Now this is on the back of its rising order inflow, negligible debt on books, and improving growth outlook that analysts have increased their confidence on the stock. Now if you see, for the full year, the company had an order inflow guidance of nearly 2,000 crore rupees, that is for the financial year 2019. But in the first 6 months only, the company was able to achieve this target of 2,000 crore rupees order book, and that's the reason analysts have increased their confidence on Ahluwalia Contracts. But similar to the last 3 stocks, Ahluwalia Contracts has also given a negative return of 11% in the last 12 months because of slower execution, project execution, and because of some tax issues that the government, that the company has been facing recently.
Well, interesting names. Some contractors or infra companies as well, an auto company out there, and life insurance company too in that mix. Sumit, thanks for putting that into perspective. A very interesting list of companies that you need to monitor. Well, this is what the sell side believes is the best buy list. You can pick and choose what you want. The third one is Manpasand Beverages. Now, you might wonder why we are talking about Manpasand Beverages numbers right now when we have not spoken about the Tech Mahindra or for that matter of Pidilite on First Word. Well, the second quarter numbers throw up some interesting key questions about the company's financials. The juice maker, which recently had to appoint a new auditor just days ahead of filing the first quarter numbers, have now thrown up some red flags in the second quarter numbers. Darshan, who's gone through the accounts, joins us right now with the details. It's not just about the numbers, Darshan. It is about what else comes out.
Yeah, so basically, if first let's pull up the P&L account and then we'll pull up the balance sheet and then you'll come to know the difference, what has happened. Now numbers, nothing extraordinary. If you're looking at the top line, the growth is of 38% top line, impressive growth. Profits were pretty much stable. The 6% drop is fine from 8.9 crores to 8.4 crores. But remember this number, 8.4 crores, that's the profit. Neeraj, just remember this number. Look at the operations, what they did. As far as the EBITDA is concerned, a 32% growth that will come in. So no one is complaining when you're growing 40% in over last year and your EBITDA is growing almost 32%. EBITDA margins coming out slightly. So if you look at the P&L number, you say, okay, this is a decent number, what's come out. But you go to the balance sheet and there is where trouble now starts. And why? And these are the questions that we're asking. Look at the depreciation. In the fourth quarter of last year, the depreciation in the P&L was 28 crores. In the first quarter, it moved up to almost 20. It was again at 28 crores. Now suddenly, in the second quarter, what the numbers they announced, the depreciation moved down to 21 crores. That's a difference of almost 7 crores. Now look at this. The plant and machinery that the company had as per the P&L in March 31st was 534 crores. In September, the latest balance sheet, it's moved up to almost 614 crores. So if the big question here is that if the depreciation, your assets are going up, your plant and machinery is going up, why is your depreciation going down? Why is your amortization going down? And remember the difference, if this difference, if they had put the same depreciation there, Manpasand probably would have reported a loss instead of profit this time around. So this is the first question that we are asking. Obviously we've asked the management, they haven't responded to our queries. So this is the first red flag where we find there are issues. Why haven't they actually gone ahead? Why is depreciation going down when your assets are going up? The second part is that look at the working capital cycle. Now the trade receivable, this is the FY, this is the as per the March 2018 balance sheet, and this is as per the September 2008 balance sheet. Working capital, these are debtor days, has moved up from 53 days to 93 days, and even we did a calculation of the first half number also, that also comes in close to 65 days. So the big question is that how come that the working capital cycle has moved from 53 days to 93 days in a matter of 2 quarters? So that is something that the management needs to answer. On the creditor side, that's the third red flag that we are raising. If you're looking at the creditor cycle, it's actually better for it, but look at it. Trade payable from 50 crores, look at the creditor cycle. From 30 days, it's moved up to 46 days. It's decent, it's not bad for the company, but the fact is what has changed that the creditor has actually moved up by 15 days in a matter of 2 quarters. So that's the question that we need to ask Manpasand Beverages. The other red flag that we have seen on Manpasand Beverages is the fact that there is increased borrowing that has happened. Now if you're looking at the borrowings on March 20, as per the March balance sheet, it's 95 crores. In September, the borrowing has gone up to 137 crores, which means that an increase in borrowing of 42 crores short term. Now if you're looking at what they have cash and equivalents of 17 crores, they have other financial assets of 107 crores, they have bank balances of 35 crores. So the big question is, when they have book money on the books, why are they borrowing 42 crores for short term? We're not saying that it's mainly a red flag, but the company needs to answer why such things have been done. The next red flag where we found issues on Manpasand is the capex mismatch. Now if you're looking at the capital work in progress, in March 2018 it was 181 crores. Now in the September balance sheet, it's just 15 crores. That means amount of assets that have been capitalized, it is 116 crores, which gives an indication that capex is pretty much over. They don't have any capex. So if capex is complete, why is this 15 crores still in capital work in progress? So this is something that the management needs to answer. And the final query that we have is the fact that rise in non-current assets. Now if you're looking at what exactly has happened, the non-current asset, March 2018, it was 167 crores. In September 2018, it moved to 295 crores, which means an increase of 128 crores. Now, if you look at the annual report that came out, the current assets, this 167 crores, this is the breakup. Prepayment of leasehold is 18 crores. Capital advances is 149 crores. So what exactly is the big rise? Is what exactly has come in here that the number moves in from 167 to 295 crores. And in the earlier slide, we showed you that the capex is almost complete. They have nothing. So where is this additional 128 crores being paid to? What is it, an advance to someone? Is it an advance for something? That is something that we don't know, and that is something that the management needs to answer. So 6 red flags in the balance sheet of Manpasand Beverages. So Neeraj, that's what we are saying. We're not saying that, you know, it's a fraud or something, but these are the questions the management needs to answer. I have written to the management. I've written to the management. They haven't still not responded to it. So if we get a response, we'll update it with their responses. But these questions certainly need to be answered.
Yep. Well, let's see if the management does come about and gives us an interaction to us, or at least responds on email. No, we're not alleging any kind of corporate governance issues here, but certain interesting questions that have come up, and be good to get answers on that front. Darshan, thanks for putting that into perspective. The last piece on First Word today is about Tata Motors. Now, JLR is expected to chip away Tata Motors earnings in the second quarter. The car-to-bus maker may, in fact, report a loss. Yatin Motors standing by with what analysts are pricing in and what should one watch out for. Yatin, morning.
Well, Neeraj, we keep on talking as to how Tata Motors is the cheapest auto stock, cheapest Nifty stock, but this time clearly, you know, the tables would turn. We are expecting a loss of nearly 874 crores versus a profit of nearly 2,000 crores on a year-on-year basis. Now, if you more importantly look at the revenue growth, we are expecting it to be only 3%, and EBITDA also seen declining by nearly 27%. And this is largely to do with the fact that we are looking at a consolidated dip in margins by nearly 4 percentage points. Odd margins are seen at only 9% versus a level of 13% on a year-on-year basis. More importantly, JLR is something which has been reeling under pressure. Ex the China JV, we have the volumes for JLR which are down 20%, and not only decline in volumes but higher discounting and promotional expenses are eating into the profitability for JLR. We are looking at a decline in revenues for JLR by 10%, and EBITDA decline would be as high as 43%. So we are talking about a EBITDA number on an absolute basis which would decline by 50%, and margins for JLR are seen at a mere 7.6% versus a level of 11.8%. And the losses also could widen significantly. On a year-on-year adjusted basis, we are expecting it to report a loss of 100 million British pounds versus a profit of 253 million British pounds. So clearly, this time JLR would be reeling under pressure, and this is largely to do with the fact that brokerages are expecting 150 to 200 million British pounds foreign exchange losses that could create further pressure for JLR.
Okay, we will watch out for these. Yatin, just one quick question. When the numbers get reported, what is that one or two most important things that you would watch out for from Tata Motors?
Well, a 9% margin, on a consolidated basis is what we are expecting. Of course, JLR margins at 7.6% is something that we'll be watching out for. But Neeraj, more importantly, we would be watching out for the management commentary on JLR capital expenditure. Currently, the UK plant has been shut down. There have been production cuts. It's public, and they have a Slovenia plant which will get operational on full throttle moving forward. In a scenario wherein your flagship UK plant capacity utilization is down, you have production cuts. What is the point in spending $5 billion over capex in the next 3-5 years? So probably there is a buzz in the marketplace that JLR might announce a cut in their capital expenditure, which would mean that the markets would look at it otherwise as to why really is JLR moving in the reverse direction and cutting the capital expenditure. There is uncertainty, there is Brexit, there is the US market, and the China trade war. All of that is clearly impacting luxury car sales. So let's really see how does the management really talk the capital expenditure plans that they're talking about, because probably at this point in time they cannot afford such a large capital expenditure when the market is really slowing.
We'll watch out for these. In all probability, the numbers might come in post-market hours, but if they do come before that, Yatin Motilal will be here to take us through the finer points as well. But yeah, those are the couple of points that you need to watch out for. One from the numbers, one from the commentary, more importantly, from Tata Motors' side. Do watch out for all of these names. As we speak, the SGX Nifty is cooled off completely, I might add. Just pull up the SGX Nifty 10 to 30, so it's flattened out completely. We come to the end of first word. On that note, excuse me, but lots more lined up on Indian Open. We decode the September quarter earnings for Meghmani Organics with the managing director Ashish Soparkar. But more importantly, with all the brouhaha over what's happening in sugar and with the estimated fall in sugar output this year, will it prop up the sugar producers? We asked the former vice chairman and founder of Shree Renuka Sugars, Narendra Murkumbi, to dwell in on this. But after this break, a full tilt towards the day's trade.
Good news, got a promotion and a damn good raise.
Congrats बेटा.
वाह, raise? अब तो insurance policy ले ले.
कौन सी कंपनी से लूं?
Choose वही जिस पर हो पूरा भरोसा.
That's good. But आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC. Trending with times. 62 सालों से हर generation की पसंद.
It's not about the award. It never is. It's about what went before and what came after.
It's about getting recognized for the trust and confidence the customer has shown on us. We actually strive for it.
It's about the brightest ideas and cleverest implementations. It's about innovation.
It's about impact for manufacturers and help for shoppers. Tangible, meaningful impact for manufacturers who innovate and genuine help for shoppers looking for the best new things on the shelves.
It's not about the award. It is about standing out. It's about being a giant even if you're really, really small. It's about picking the leaders of tomorrow, today. It's not about the award. It's about competing.
It's about an unbiased, countrywide, face-to-face consumer survey that is unique and provides relevance and differentiation. Essentially, we're adding something to the marketing arsenal of product teams.
It's about doing one's best and raising the bar each time.
So it's about the end customer. You know, if you have that clarity, what is this need that you're trying to solve for the end customer?
About exceeding expectations. About going all in. Coming. Product of the year.
It's about feeling good that we are associated with Product of the Year. This is our 10th year.
30 years of finding brands that capture a billion.
Hello and welcome. You're watching Indian Open right here on Bloomberg. Going to a quick pit stop to see what the Asian markets are doing this morning before we take you through cues for our markets as well. So a good opening session for Asia. So you've got the Nikkei 225 up 1.5%, Shanghai's up about 1% or so, and so is Hang Seng. So the trade out there looks positive. For SGX Nifty though, we're trading absolutely flat. This has changed actually. We are just now borderline in the red. It was up closer to about a 1/10 of a percent or so. From there it's cooled off a bit. So we're going to be keeping a close eye out on how trade opens and how the setup is for trade out here as well. But yesterday's session saw some amount of longs getting unwound in the system, particularly on the Nifty futures. Let's bring in Darshan Mehta to talk us through the cues in the derivative space. Good morning, Darshan.
Good morning, Deven. And what change in our mix? On an hour back at 7:30, we were up almost 80 points on the SGX Nifty. Now we're down 8 points, despite the fact that Asia is doing well. We have some some bit of pending news that could come in that could derail our markets also. So that's something that we need to watch out for. The Nifty yesterday saw long unwinding that came in. The open interest was down 1%. The index was down 0.5%. Similar were Qs as far as the bank Nifty is concerned. Open interest was down 5% and the index was down almost 0.6%, led by the HDFC twins. Now, where are positions being taken? 10,200 seems to be the immediate support, and the next support for the market is at 10,000. That is where put writers are actively very active in the market. Call writers have written from levels of 10,300 to higher. They have minuscule positions at 10,200 also. So even the bulls at this point of time know that 10,200 is safe. Now with the SX Nifty coming in at levels of 10,200, there will be more pressure. Put writers may have to cut positions if any kind of adverse news comes in. What happened in trade yesterday? It seems that it looks like a little bit of range bound, because put writers were active at 10,200 and call writers were active at 10,300. So it could go either way. It could be range bound between the 10,200 and 300 mark. That is what the cues that came in after in trade yesterday. As far as the PCR is concerned, PCR for the Nifty was stable, but the Bank Nifty PCR again came off below the 1 level mark. Adani Power is the only stock in the F&O ban. As far as a couple of stocks I want to highlight, Voltas didn't move much, but look at the open interest build up of 25%. So there is definitely accumulation that is happening on the counter. The other counter in which there is accumulation is Just Dial, open interest build up of 17% on the long side, post the numbers that came out. Dalmia Bharat saw fresh buying, open interest build up of 15% on the long side, and this after a few days ago the counter was trading at a fresh 52-week low. And Deven Housing is the last stock I want to point out. Open interest was down 10% and the counter saw a huge amount of short covering, which propelled the stock by almost 12% higher.
Okay, Darshan, thanks a lot for that. So we're going to keep all of that at the back of our mind as we enter trade this morning. Dharmesh, Kant, head of retail research at IndiaNivesh Securities, is joining us on the show right now. Dharmesh, thanks very much for taking on the time and good morning to you. Yesterday's session, the day before that, we saw a good up move on the index. Again, the question was whether or not that was a flash in the pan. Yesterday saw some corrective action again, some longs getting unwound in the system. The overall trend is a little bit difficult to predict at this juncture, but in terms of telling your clients what they should do with the money that they have, how are you positioning yourself?
Yeah, very good morning to you. I think some rumors are going around. Had it not been there, so today we could have seen continuity of the rally which took place day before yesterday. Yesterday was more of a corrective kind of environment. What we have been noticing in the market is, in spite of the markets going up, there has been a consistent selling pressure by the FIs, and the stock specific selling was there. Like if you look at the last 2 days market activity, quality banks like HDFC Bank, HDFC Limited, Kotak Bank, IndusInd Bank was consistently being sold into. Even Maruti came under good selling pressure yesterday. So the distribution pattern has still not evaporated. It's still continuing in the market, and there is the impact cost comes down when in a rising market you tend to sell quality stocks. So some sort of index management is happening. As far as clients are concerned, we are very strictly sticking to the bottoms up kind of approach, being very stock specific. From the results which have came out so far, what we have pushed strongly to our clients is, one was the RBL Bank, and it gave us a very good opportunity to enter the stock at 480, 470 kind of odd levels when the prices corrected down. Again, it was a rumor based kind of a selling which took place. The numbers were excellent, be it the revenue growth or the PAT growth and names, cost of fund, everything was in place, and there was no ILFS exposure out there, so that helped. The second stock which we have been pitching strongly to our clients is Bharat Electronics. Again, a very good set of numbers, and it is likely to be repeated in Q3 as well, because a lot of EVM machines will be supplied and the entire revenue will be booked in this quarter. Order book remains healthy, and valuation wise it's again comfortable. So these are the two stocks, and some housing finance buying we recommended more from a trading perspective, and our top pick was Canfin Homes, which is very fast. Going forward, I do believe that market will be volatile, but somehow the sense is that it will have more up moves than down moves for some time to come. So I mean, for traders it can be selective buying, and the space is almost decided. There is no two ways out that. It has to be financial, and PSU banks offer a good opportunity, because the numbers which have come out so far
have been pretty good.
You have been seeing asset quality deterioration getting arrested, so that gives a relief.
That's true. Yeah. Dharmesh, what did you make of the large boy Tech Mahindra's numbers?
Yeah, good morning. Yes, the numbers were, more or less in line, nothing great to take away. And IT stocks, most of them have been benefited by the currency factor. Same has been the case with the pharma companies who have reported the numbers so far. So, as a basket, if you, we are not recommending, to accumulate IT stocks, be it Tech Mahindra, Infosys, TCS, SCL Tech. Though none of them disappointed on the numbers front, they were more or less in line. But valuations wise, I think it's fastest. And currency may be on the last leg of the upside trajectory. So going forward, primarily into Q4, we won't be having this tailwind which is there. And competition remains as it is. So though silver lining is there, but still valuation wise discomfort remains. So more of a trading play from a day-to-day perspective, nothing to even hold for a month or so. So we are not recommending IT stocks, while what we are recommending is pharma in place.
The other big one that's reporting, in fact, two big numbers coming out today. One is L&T that we're going to be closely watching out for, and the other is Tata Motors. What is the breakdown of the numbers that you're factoring in, Dharmesh?
See, Tata Motors, as far as sales are concerned, I mean, JLR Land Rover has a degrowth for this quarter, so that's already been known to the market. Indian side has done well, be it the passenger vehicle or the MSCV segment, so that will contribute. It's very difficult to predict the PAT number of Tata Motors, primarily because of two reasons out there. One is the currency, cross-currency, hedges they take, and every time some sort of a new adjustment is there, so very hard to predict on that count. And second is the taxation front. So these two are the key plays below the operating profit, which takes a hit. This time there would be a degrowth in the operating profit for sure. Around 70-75% comes from the JLR Land Rover. So that segment is going to take a degrowth hit. My own sense is that it will report a loss. What would be the quantum of loss this quarter? Because of the currency hedges, as I pointed out, it's difficult to say. But maybe 300 to 500 crores kind of a PAT loss this quarter on a consolidated basis is likely to be reported. That has already been discounted in the stock price. If you see the stock price movement, what will be seen is if at all they give some sense of a market trajectory going forward, because the JLR CEO has time and again said that it will be difficult to maintain the sales trajectory in UK after the Brexit. So what's the stand now? If it continues to maintain that, so again some selling pressure will continue on Tata Motors. So not a right time to look at accumulating it. Maybe post earnings and post some guidance given by the management, we can have a relook at it.
All right. Just stay in with us, Dharmesh. Lots more to talk about. Before that, let me quickly go across to our research team. They're standing by to talk about some big numbers that came up post-market as yesterday, as well as some stocks and news that we're going to be closely keeping an eye out for in order to see a market reaction, whether or not that comes about. So it's almost a full house. Nikki, I'll start off with you and Vedanta.
Not great set of numbers that we're expecting. Aluminium and zinc business, profitability of that, a decline that would say way down on the numbers. Look at the top line growth. We're estimating a 5% downtick there to a number of around 20,605 crore. EBITDA is seen flattish, around up by as much as 2% to a number of 5,700 crore. Margins are expected to stand at 28% as compared to 26%. And profitability for the company on consolidated basis is expected to see a downtick of more than 35%. What goes behind the making of the numbers, operational gains in power as well as oil and gas business is expected to be negated by zinc and aluminium business. Higher alumina and coal costs is expected to weigh down on aluminium business. Zinc business is expected to be affected by the realization. Copper business will continue to see a decline on account of the closure, and higher crude oil prices are expected to aid the profitability of oil and gas business. Key things that we like to keep an eye out will be the progress of 1.25 MTPA smelter, the base metal prices momentum thereon, and the petition that Vedanta has filed on account of hike in import duty for aluminium. And apart from that, we'll also look on any updates that come through on electro steel updates, given that Renaissance Steel has alleged of the company's ineligibility towards the bidding process.
All right, that's Vedanta. What about Tech Mahindra that reported numbers?
Sure. So Tech Mahindra earnings came right at market closing, which is why we should address these, considering we have seen strong earnings coming through. We saw a revenue uptick around 4%. That was largely in line with expectations. What was ahead of expectations was the margins coming in at around 15%, as against your consensus running with a number of around 14%, and your profits rising 18%. Do remember, in dollar terms, your revenues rose, or rather declined by around 0.5%. But on the whole, the street is happy with the way things have panned out when it comes to its margins, considering the currency tailwind playing out. Of course, the management has spoken a lot about its digital initiatives, as well as aspects of the communications vertical, which has also shown a lot of strength in this quarter. On the whole, a good set of numbers for Tech Mahindra coming in.
Got that. Thanks, Agam, for that. L&T, Darshan.
See, 10% top line growth is something that we're seeing. Profits will be down 10% because of an exceptional item that the company had in the last quarter, in the last year, same quarter. EBITDA, we're seeing a growth of almost 13%, which will mean that EBITDA margins will be stable at close to 11.5%. Now, execution has been good both in the Indian markets and the international markets, and you know, their mainstay, that is EPC construction, that will drive revenues. We've seen how crude has behaved, and that's why hydrocarbons will be good for them. They have received defense orders, so that will be good for them. On the flip side, if you're looking at it, other income will be lower this time around. Depreciation probably will be higher, and that is why the profit will definitely fall this time compared to last time. Order inflow, we are expecting close to 40,000 crores of order inflow that will come in as per the number that they've reported, and a few more. The management had post the Q1 had said that, you know, this time around they expect orders to be front-ended, and that probably means that, you know, in the first half there will be sizable orders that will come in. Guidance, revenue guidance of 10 to 12%, order inflow guidance of over 10%. That is something that we need to watch out, whether the company will maintain that or no.
All right, and lastly, Yash, some more stocks news.
Right, I'll start with Tata Steel, and there the European Union, they are mulling a detailed investigation into the ThyssenKrupp planned joint venture with the company over concerns that it would raise prices and harm competition. Dr. Reddy's would be in focus as well, after the company has received 8 observations under the Form 483 from the US FDA for its Visakhapatnam facility. Blue Star, the board has approved setting up of a new manufacturing unit for water coolers and deep freezers in Maharashtra for an investment of about 115 crore rupees. PNB as well, wherein market regulator SEBI has exempted the government from making an open offer in which the government plans to raise its stake to close to 6%. In terms of the key earnings to watch out for, Bank of Baroda reported a good set of numbers. The net interest income has gone up by 21% to 4,492 crores. Provisions asset quality has improved significantly. The NPAs have come down to 4.86% as compared to 5.4%. As far as Cummins is concerned, that too reported a good set of numbers. A 29% growth on the top line. Margins have come in at almost 17%, which is a 300 basis points increase over the previous quarter. Team Lease also reported a good set of numbers. Revenue growth of 25% over the same period last year. Net profit growth of about 43%. Pidilite, similar story as compared to Asian Paints. The numbers were weak. Revenue growth was about 15%, but the big drawdown was on the net profit, which has fallen by 8%, and margins have also come off significantly as compared to the analyst expectations.
Okay, Yash, many thanks for that. Now, news on our social websites as well, on our social platform as well. The government has issued letters to RBI to initiate consultation under Section 7 of the RBI Act. Ira Duggal, our banking economy editor, with us right now for more on this. Ira, the first time that the government in its history has done so, in RBI's history has done so.
Absolutely. I cannot emphasize the importance of this development enough. But first, the news that has come in, we have confirmed from our sources, and this was reported by the Economic Times earlier, that the government has issued several letters to the Reserve Bank of India under Section 7 of the RBI Act. Just to tell you what this Act says, the Act says that the government can give directions to the RBI in exceptional circumstances in public interest. It's a very broad throwaway line in the RBI Act, which is intended to be used only in exceptional circumstances. But it looks like the government has issued letters, and I go back to saying several letters to the RBI, not yet invoking Section 7, but the process that it follows follows is that they first send a letter saying that we are beginning consultations under Section 7. The RBI governor and the government then have consultations, and then perhaps the government goes in and gives directions. Now, we haven't gotten to the stage where directions have been given under Section 7 of the RBI Act, but we have gotten to the stage where consultations under Section 7 of the RBI Act have indeed been initiated. Now, what are the issues that it's been initiated on? I don't have a confirmation on all the issues, but we do know that the prompt corrective action framework is one issue on which the government has invoked consultations under Section 7 of the RBI Act. I also want to clarify that all of this has happened a month back, it seems.
Okay.
So that tells you why Viral Acharya came out and gave that public speech. We were all wondering whether he had gone too strong on this. We were all wondering whether there was sort of too much vitriolic in the public, but we now know what the provocation of that vitriolic was, and the provocation was that the government has done something that no government has done in the past, and that is invoke Section 7 of the RBI Act, at least for consultations, if not for directions. What happens now?
Precisely.
What happens now? Guys, I'm going to be very careful in my wording here. Very, very careful in my wording here. This is the construct of the RBI Act and the Section 7 of the RBI Act. Essentially, the spirit of it is that there has to be an agreement between what the government does and what the RBI does. Right? Now, there are two ways to come to that agreement: normal concentrated process, which have been used for decades and decades and decades, and then there is the Section 7 of the RBI Act, where the consultative process can happen, and perhaps the government can be convinced once again of the RBI's view. But should directions be issued, it would be tough to envisage a governor not stepping down. We don't know whether that is happening, but it is a direct affront on the RBI's decision. It also says, and it's not just about ego, it also says that the governor and the RBI are no longer in sync with the government. And that is a big thing for the RBI to be able to say that they don't have the trust of the government, or that the government is not in line with what the RBI is doing. So it would not be out of realm. Of course, it would be the choice of the governor. It would not be out of the realm of possibility or imagination that should Section 7 actually be invoked, and I keep saying should it be invoked because right now it has not been invoked, it would not be outside the realm of possibilities that a governor under whom this Section 7 has been invoked would choose to step down. Now, we don't have any information as to whether Urjit Patel has been asked to step down or he has offered to step down. We have absolutely no information about that at all. But I think things have gotten to the point where there is nervousness in the market. I think we should pull up the 1-month NDF chart of the currency that has gone to 74 this morning. There has been other pressure points, the yuan weakness, the dollar strength, etc. But there has been a spike in that 1-month NDF chart. If we have it, we should pull it up, which is telling you that this is now starting we should change that.
We should change this.
Yeah,
it's not been invoked as yet.
Consultations under Section 7 of the RBI Act have been initiated.
Yeah, okay, this is important. Now, a couple of points. This couldn't have come at a worse time as well, right? We know what's happening in the US and this whole trajectory. There is a crisis of confidence in the state-run lenders, and now you have a potential situation wherein the RBI governor could step down. It couldn't come at a worse time.
It's not even that. I mean, even if the RBI governor does not step down, look at the situation we are in.
True.
We have the government and the RBI at each other's throat through public speeches. So even if the worst does not come to pass, this is not an ideal situation. We had a conversation with Rakesh Mohan yesterday, which was timely, and he said that you cannot have such public airing of views. Although he said that I don't know what the provocation is. Maybe the provocation is strong enough, and this is most certainly strong enough provocation, because no RBI governor would want to be seen as the person who allowed the government to dictate terms to the RBI. The RBI's autonomy is very well enshrined. There is a debate about how you see the RBI's independence, and that in a developing economy, the government has to have a say in policies that impact the economy. We get that. But within that box of independence that has been defined, the RBI has autonomy. I don't think any governor would want to sit and preside over a reserve bank which has whose autonomy has been taken away. And I also want to point out, and this is relevant in the sense of how things have played out over these 2 years. Urjit Patel has hardly had the easiest of terms. Remember, he was 2 months into his post when demonetization was announced. And by all accounts now, it is quite clear that it was the government's decision. Just from his perspective, I don't think he would want a second event which would be seen as him letting down the Reserve Bank of India's autonomy. What does this mean for the markets and the economy? Well, we'll find out if it ever happens. But even the fact that a prompt corrective action, something as sort of mundane as a corrective action framework on banks, gets the government to invoke Section 7 is worrying for the markets. Then regulators have no autonomy, I suppose, in deciding what is best for these banks. And remember, these banks are 22, 23, 24% NPAs. Can anybody argue that they should allow to be functioning the way they were functioning in the past? Yeah. Anyway, that's a little bit of a rant on my part, but the news is on your screen.
No, and I think, well, maybe the rant or whatever you call it is warranted as well, because I think a number of people have done this. Just one last question from mine. I know that Deven has a question to you or no, but Ida, just one question. There's also talks of how, aside of the PCA, the conversation was also around the transfer of reserves that the government is wanting, and the RBI is saying that let's not do that. Anything that you're hearing on that front?
I don't know whether that is one of the issues on which consultations have been invoked. But yes, if I just list out the 4 or 5 contentious issues right now, it starts with the reserves, which is a story that started almost 2.5, 3 years back. Narendra Subramaniam, put it out in his economic survey. It's a question of both the dividend that is paid out to the RBI and the capital that the RBI holds, 2 separate things, and both are under question. Then you had, of course, the February 12th circular, which was very stringent. And I just want to point out that in the February 12th circular negotiations, when the issue went to court, the court suggested that Section 7 can be invoked, and the government stayed away from it at that point in time. Then there is, of course, the prompt corrective action framework, where 11 government banks are under the framework, and the government seems to want them out because they want them to start lending. Then, of course, now more recently, there is the issue of NBFC liquidity. I think reports that came out from yesterday's FSTC meeting suggest that the government wants the RBI to take more measures to infuse liquidity into the system and into NBFCs. The RBI seems to feel there is no systemic crisis, so that is not required. So those are some of the issues that we know publicly are on the table. Oh, sorry, I forgot to mention the payments regulator. There is a debate over whether the payment regulatory framework needs to be taken out of the RBI. Again, a suggestion that nobody really understands where it's coming from. But all of this is on the table, so we'll see how it goes, guys.
Interesting. Yeah, I'm sure you have a lot of things on the plate, so we'll leave it at that. But yeah, this is breaking news, and Ira Duggal, our banking and economy editor, weighing in on that. I think this is something that will weigh in on the markets too. We'll talk more about it as and when it happens, but consultation process is on. In fact, as we said, letters probably issued a month ago, and not just issued in the last couple of days. So the skirmish is out in the open. Let's just see if this indeed goes ahead. Let's be very let's be very categorical about it. The Section 7 has not been invoked as yet. If it has been, we don't know about it. What we know is that consultations under Section 7 have been on, and that is something that got to keep it at the back of your mind. It's had its bearing on the markets, Devina, about 1/4% lower after being about 1% higher. I dare say if this indeed turns out to be true, then there could be some serious nervousness. Maybe the SGX Nifty is belaying what could actually happen.
Probably. Early indicators. We were, in fact, just at the start of the show when we took a check, it was flat, now down 1/4, and that's come off from being 80 points higher in trade this morning. So it's completely a divergent move from what the rest of Asia as a pack is doing. But we'll talk about all of that and more and get you more as this particular news develops. But let's keep it to the markets as well and lay focus, because you're going to have pre-open in about 8 odd minutes. And
Yep, 8 odd minutes that the markets will kickstart. Let's get in our experts in on board to talk about what will happen to trade as well. It's important to identify that too. So while we will talk about the RBI and what happens later on, let's just get in quick trading perspectives. 7 minutes left for the markets to kickstart trade. Gaurav Bissa of LKP Securities joins us right now on the show, as does Chandan Taparia. Gentlemen, both of you, good morning. Thanks for joining in. Gaurav, how are you approaching trade today? It looks like there will be a bit of weakness on open itself, maybe because of these rumors doing the rounds. How are you approaching trade? What's the trade that you would take?
Good morning. The trade setup is positive. I would not say it's exceedingly excellent, but yes, some amount of upside cannot be ruled out. We have seen a bounce back coming from levels of 10,000, a psychological mark. We have seen put options being sold in last couple of trading sessions. So there's a chance that we may see a continuation of the current trend, and it can head towards the level of 10,320, 340. However, I would not be too aggressive. One can buy a call option, but the IVs are very high, and if there's some consolidation, we may see the IVs dropping off, and we can see theta erosion as well. So for me, the ideal strategy would be to sell a 9,800 option for Nifty, for the reason that even if Nifty consolidates between 10,200, 10,300, we are going to make money by selling a put option. If Nifty sees a good up move towards the level of 10,350, 10,400, in that case also we shall be making money. And since there's a strong support band between levels of 9,000, 950, 10,000, selling even 100 point away option would give it some amount of cushion in case if market sees a small downtick today or tomorrow.
Okay. Chandan, let's quickly get through your Nifty call as well.
Good morning. We have seen a strong recovery on this Monday when Nifty rallied by 220 points by respecting its psychological 10,000 zone. It is respected to psychological 10,000 and also the 52 weeks low of 9952. But follow-up is required. That is not happening from last two trading session. But the immediate trend is the buy on dips as of now till it holds about 10,138. So for any dip till it holds about 10,138, we'll approach for buy on decline activity for an up move towards 10,280, 10,333 kind of level. However, the volatility is continuously moving up and VIX is now near to 20.50 level. So again, volatile swings are likely to be there in the market. And if it cools down below 17, then only the smooth ride or the durable bottom could be there. But as of now, the way market has recovered from the support, till it holds above 10,138, one can continue to be on buy on decline strategy for an up move. So better to trade in future or go with the options, or can go with the bull call spread as volatility is comparatively high. One can buy one lot of 10,200 and sell one lot of 10,300 by paying the premium of 35 points. So better to be with positive to range bound and play in the bull call spread to get the positive to range bound bias of the market.
Okay, gentlemen, just stay on. Time now for Bloomberg Edge, a special segment where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock or a particular trend that he spotted. Yash, what's the stock on your radar today?
Good morning, Devina. Page Industries is a stock that we are looking at, and that one has, with its move of yesterday, has closed below the 21-day exponential moving average. Now, what is the exponential moving average? Well, it is a trend following indicator. It is more efficient as it reacts very fast to the recent price moves and is better suited in the event of a trending market. Now, what we could see from the chart over here is that the stock has been making lower lows and lower highs over the last several trading sessions. It has gone from the levels in excess of 35,000 over here and has fallen all the way down to 30,000 and has breached those levels with the move of yesterday. The green line over here, that is the 21-day exponential moving average, and the stock has closed below it, indicating that there could be further selling in the stock from these levels.
All right. Yash, how accurate is this indicator?
So every time the indicator turned negative and you went short on the counter, it has managed to give an average return of 21% on the downside.
Okay, great. Thanks a lot for that, Yash. So that's the Bloomberg Edge segment for you. Let's get back to our guests and talk about some trading ideas and specific stocks. I'll start off with you, Chandan, on your strategies in IndiaNivesh Bank as well as TCS.
Yeah, first talking about TCS, after the decline of last 4 weeks, the stock is bottoming out. It is respecting to its 200-day exponential moving average, and which indicates that some up move could be seen. It is also seen the positive crossover on the mechanical indicator like MACD and the RSI, and the open interest is also indicating the positive stance. So recommending to go along with the stop loss of 1850 and expecting it to move towards 1950 kind of level. Second trade is sell on IndiaNivesh Bank. We have seen the strong recovery in the broader market, but this stock is continuously falling down and making lower top, lower bottom formation. Even in this month itself, it's down by 20%. In the last month also, it fell down. So bears are continuously putting pressure and having the tight grip. So expecting more weakness to continue. One can continue to be with selling on trailing stop loss of 1385 for the downside target towards 1320 levels.
Okay, Gaurav, Bissa, what about your ideas?
For me, the first recommendation will be buy on PFC futures. We have seen consistent upside in the name. Good amount of volume participation has been seen. 90 call option commanded a high concentration, comfortably close above these levels. Put option has seen decent amount of writing on 85 and 90 put options. Some amount of short covering has been seen to tune of 3.5 to 4%. One can play for target price of 97, keep a stop loss of 89.8. Second recommendation will be buy on Idea. It has come out of the consolidation zone. About 2% over addition has been seen. Some longs are seen getting built. One can play for 41, keep a stop loss of 37.75. And Ashish Motors is sell consistent short positions seen getting built. Breakdown on hourly charts. 7% over addition has been seen getting built yesterday. Target price of 20,500, keeping a stop loss of 29,420.
Okay, got that. Dharmesh, anything in particular that you're closely watching out for? Now we're almost in the midst of the earnings season, so with regards to the earnings track that we've seen so far, we'll come to you with that in just
a moment from now, I know, because the markets are just about getting ready to start. But Deven, I think it's important to highlight that while the world markets are doing rather well for themselves today, because of this news overhang, we might likely start off lower. So I don't know about whether the good results get rewarded on the positive side very well or no, but the weaker names could be very important to monitor. The Pidilites of the world could be really important stocks to monitor today, because we might start off with a bit of
the overall mood itself
bit somber.
Will probably determine the course of the day as well. And whether or not we get the news that everyone's probably factored in already. The confirmation of that is something that's awaited. But 16 seconds left to go for market pre-open. While Asia is a pack is something that we probably cannot align ourselves to at this point. That's up. So SGX though down about 0.1% or so. 10,217. Yesterday was a day where the market saw some unwinding of the longs that were built into the system in the previous day. But that's the pre-open tick for you. So not all that bad actually. 0.25% higher, but this is just the initial market mood. We'll probably wait for a few more minutes to wait and see where these prices stabilize. The Nifty is at 10,235, 34,117 on the Sensex as well. Taking a look at what's been happening on the individual stocks, and Yes Bank on the index is up closer to about 3%. Ultratech Cement is up 2.5%. Tech Mahindra is up 2% as well. Remember, it reported numbers. Larsen & Toubro reports numbers today, so you're going to be watching out closely for the kind of performances that they post. That's up 2%. Infosys is up 1.5%. Indian Oil, that's up about 1.5% as well. Titan is up 1%. Asian Paints is up 1%. Reliance Industries, one of the key contributors on the losing side yesterday, at least in the point contributions that came in yesterday's session, where it was one of the losers. Hindalco, Wipro, Grasim are some of the other gainers in trade on the Nifty. Amongst losers, Dr. Reddy's has shown you a 10% cut after receiving Form 483 with 8 observations by the US FDA for its Visakhapatnam facility. We'll see whether that corrects and stabilizes, or we see that big 10% remaining perch there. Coal India down 3.5%. Remember, the offer for sale starts today. 3% in Coal India is a divestment that the government is doing at a price of about 266. That's exactly the price at which it's trading right now. Tata Steel, Kotak Mahindra Bank, some other losers.
The rupee, the biggest monitorable to my mind early morning, starts off at about 73.94 now. So very close to that 74 mark. Levels that the NDF market was anyways hinting towards. But yeah, 73.94. This has not been a great year for the currency, and today it promises to be, at least the start promises to be a really tough day. Let's wait and watch what happens during the course of the session. The bond yield should come up on your screen as well, and let's see. The yields have hardened a bit. Yes, they have. From 7.81 yesterday, there's a bit of a drop in the bond prices and a hardening of yields as well. 7.88 currently, and this is only on the hint of the news. Let's see what happens if the news indeed turns out to be true. Let's not run ahead of ourselves. I must add though, we don't know if this has happened or no. Yes, the consultation process is on, but we don't quite know whether that has indeed lead to something else or no. Just a couple of other stocks that I want to mark before we get in our guests back in the discussion. There is, I think Dr. Reddy's remains the top draw, but Pidilite should be the other one that should come up on your screen. The numbers look wobbly, and let's see what's happening to that stock on open. Well, not too much really, but let's wait and watch. There is strength in Bank of Baroda, and may not be a 10% uptick, but in line with what the other PSU banks have enjoyed. post what is arguably a good quarter. Bank of Baroda starts off decent. Cummins, I thought the numbers were impressive. That stock looks like starting off well. We should also pull up Container Corporation and Team Lease because those were two numbers that look fairly impressive. Let's see if the stocks are duly reacting. This is a low volume stock, Concord, but starts off about a couple of percentage points higher. Team Lease, it's not a cheap stock, mind you, but the margins were expanded to northwards of 2%, 2.2%, and that should augur well for the stock as well. About 1% and 1.3% higher. Let's wait and watch whether it goes further from here or no. So good reactions to all of these names. Before we get in, Somit Sarkar, Dharmesh Kant is with us. He's been waiting by for a bit. Dharmesh, these 3 or 4 mid-sized names that have come out with numbers, do you guys have coverage on any of these? Do you like any of these personally?
See, I don't track them very actively, but my own sense is that what we have seen so far, even the good numbers have been sold into eventually. So there has not been a drift or a trajectory on the upside. So a couple of days is what you get in this kind of a market environment we are in, and the news flow which I just heard about. In fact, I was not aware of all this thing going around. It raises a big question mark again on the stability of the policies and frameworks in place. So even if the consultation process is on, why the need for this consultation process itself has to be answered first, and what are the points where the divergence has been there for such a long time. So these are very important questions from investors' perspective, from people who want to put serious money into the economy in this falling market, and when uncertainties are there. So I don't think market is going to like it, and maybe if something more confirmation comes on these lines, we are in for deep trouble going forward as far as equity market is concerned. So better to sit on the sidelines and watch this entire saga unfold rather than being a braveheart and jumping into it.
That's a quick view coming in from Dharmesh. Just, coming to you, Gaurav, while we're talking about Dr. Reddy's, and should pull up the stock in pre-open, the initial tick was 10% lower. What's the call on the stock performance itself? Because Pharma as a pack has still been under some pressure in the recent past.
Yeah, exactly. And with the kind of move that we have seen last couple of days, and yesterday also we saw about 2.5–3% up move coming in from the lower levels of the day. Let us see where it sustains the level, where it opens actually. The immediate support that I can talk about is the levels of 2250, 2300. If these levels are sustained, we can expect some bounce back coming in. If not below this level, we can see a significant pressure that can again build up in the name. So for the time being, for people who already bought earlier, the stop loss should be 2250, 2300. Below this, there can be some more trouble for the name.
Just stay on with us. I'll come to you as well, Chandan. But in the meantime, let's quickly take a look at the brokerage calls for the day. Samit Sarkar is joining us. Samit, good morning.
On the big brokerage calls for the day, first we have is Goldman Sachs on Page Industries. Now the brokerage has initiated coverage on the stock with a neutral rating and a target price of 28,695, which suggests a potential downside of only 1%. Now the brokerage is positive on the medium-term prospects of the company's revenue and margin, but it still has a neutral rating on the stock because it says that the risk-reward is balanced when it comes to Page Industries because of its high valuations, and that's the reason why it has a neutral rating on the stock. Now the company, the brokerage says that the company has a good track record of steady margins and consistent cash profits that it has generated in the past, and on the back of this, it is expecting the company's revenue and net profit to grow at a compounded annual growth rate of 20% and 21% over FY18 to FY21. However, it still has a neutral rating because of its high valuations. Now, second we have is HSBC on Grasim Industries. Now, the brokerage has upgraded the rating on the stock to buy from hold, but has cut the target price on Grasim Industries to 910 from 1,140, which still suggests a potential upside of nearly 13%. Now, it says that the holding company discount has hit a record high for nearly 70% when it comes to Grasim Industries. Now, they have cut the target price on Grasim Industries to adjust for the losses that the subsidiaries have seen in the last few months, and to adjust that they have brought down the target price, but this says that it is a good buy because of the cheaper valuations, and as the holding company discount is at a steep discount of around 70%, which is not justified when it comes to Grasim Industries, and that's the reason they have upgraded the stock and have cut the target price to around 910 from 1,140.
Got that. Saman, thanks very much for that. So those are the top brokerage calls that we're tracking. Dharmesh, Kant, take a moment to thank you. Appreciate you just staying with us and sharing your thoughts and views. Deven Choksey of KRChoksey is also joining us on the show right now. Deven, good morning to you. Slightly volatile market to gauge as such. I mean, obviously the overall trend remaining a little bit more subdued on the downside. But what's the key sense of risk right now that you are weighing in?
Yes, good morning. Well, I think few things which I'm getting, I think the month of October particularly has been a month of, I think, a good amount of pain. Largely the withdrawal of money, I think, happened on a successive day, every day, I think, in this particular month from the global ETF side, and that caused good amount of pressure. Currently, I see at least, I think, some amount of breather coming in. Generally, I think we were earlier thinking in few years back, I think some 10, 12 years back, I think we would always think that the month of December is the month in which I think the FIs would sell and get out. Then I think they shifted to November. I guess I think they are bringing the cycle back to October again. I think it looks like. So it appears that I think the larger part of the sale in the market is over from their side. Should that be the situation, according to me, I think the market would stabilize, would probably, I think, stop or halt, I think, for going down. And that's where I believe that I think you should be seeing, I think, a relative amount of stability in the month of November as far as the market is concerned. Fortunately, corporate fundamentals and economic fundamentals are extremely buoyant and they are supporting. And that's where I think the valuations are demanding kind of an attention. I would think that if you still believe that I think there is a global headwind on various aspects, I think continuing. You have a Brexit situation happening in November. You have the America, China, once again, I think, getting into the balanced part of the trade war, etc., or the what you call duties on the imported goods, etc. All of those issues basically, I think, are likely to pan out in the month of November. And should there be some kind of a soft landing on either side, I guess I think the situation would be far under control. And that's where I believe that I think the fundamentals would prevail over the weak market technicals, which is, I think, ruling the market at this point of time. So I'm relatively cautious. I think I'm relatively optimistic, and given the valuations and the strength, I feel that I think the market should have a steady November month.
Okay. Let's wait and watch. 5 minutes left for the markets to kickstart trade. Let's tell you all that you need to know to stay ahead in trade today. Let's start with earnings. 3 Nifty 50 companies, L&T, Tata Motors and Vedanta, will announce their second quarter numbers today. Amongst other companies, Lupin and United Spirits will be the large ones that will be reporting their results today.
Among earnings that came out post-market hours yesterday, Tech Mahindra, Cummins, Bank of Baroda, Teamlee, Star and Power and Container Corp reported a strong set of numbers.
Whereas it was a disappointing quarter for Pidilite, Tata Global, Wakrangi and Borosil Glassworks.
A setback for Dr. Reddy's Labs as the drug maker received 8 Form 483 observations by the US FDA for its Visakhapatnam facility.
Coal India will be in focus today as the government looks to sell 3% stake via the OFS route.
And in some key brokerage calls, HSBC upgrades Grasim to buy with a lower target of 910 rupees, while Goldman Sachs has initiated coverage on Page Industries with a price target of 28,695, but suggests a potential downside of 4%.
Well, let's talk some stocks. 3 minutes left for the markets to kickstart trade. Chandan, Taparia, Dr. Reddy starts off about 5% lower. Is there a trade here?
Yes, stock has already seen the recovery and headed to 2600 zone, and that is the immediate hurdle. So I think let it now stable again about 2500 zone, then only the buying interest could come. And I think after the gap down opening, better to wait and watch and let it save the next price pattern, then only we can initiate the trade.
Interesting. What's done well is Cummins India. If you, Gaurav, Bissa, look it up on the charts or otherwise, do you track this one at all? The results were good, so therefore this kicker. But technically, how does it look?
I do track Cummins India, and if you look at the charts, there's not much of a data that we can expect in the name, but if you look at the charts, it's trading near the immediate hurdle of 740. For me,
patchy line. Okay, I'm just having a slightly patchy line with Gaurav Bissa, but maybe taking a couple of thoughts from Deven Choksey as well. Deven, 2 or 3 results that have come out. Any thoughts on any one of these? Cummins India, Bank of Baroda, or a container corporation?
Neeraj, I think I haven't studied these results, so I would probably buy some time before I come back to you on the comment on these companies.
Okay, fair call. Deven, just one final question really. It's going to be a busy morning, wouldn't want to take too much of your time. But any PSU bank, because of the results that have come out, that you've been enthused with?
Honestly speaking, I think situation is turning better for PSU banks as far as I think the receipts of the non-performing asset related proceeds are concerned. I think through NCLT route. So I think that is definitely positive. Given that kind of a situation and given the fact that I think the government is keen to merge the PSU banks, I would think that situation can only be better from here on, and I think not worse. I would rather think that if they consolidate and show some kind of a clarity as far as the business roadmap, probably that would be the best way to look at some of these companies. As of now, that clarity is missing. We don't have the clarity about whether the management of these PSU banks would be allowed to run the bank for at least 10 years or so. We don't have that kind of a clarity. When you don't get the clarity for the lending institution, for the continuity of the people who are running the business, I think it becomes a risky proposition to buy the companies in your portfolio. So we prefer to go with the corporate banks, private sector banks, where we feel that they are relatively better off, and their business plans are much better off as compared to the PSBs. So give definitely a preference to private sector banks. SBI within the PSB remains relatively more stable. BOB is having the promises, but we'll have to wait and see how exactly it pans out. But other than that, no mid-tier small PSBs for sure.
We'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective. 17 seconds left for the markets to kickstart trade. Chandan, Gaurav, we'll just take in one thought from you post-market open. So just stay on, gentlemen, for a moment. The markets are about to start, so can't ask your calls right now. We'll do it immediately post-market open. But 4 seconds left for the markets to kickstart trade. Nervousness, flattish pre-open rates. Let's see if they last. The Nifty Bank, Nifty and the Sensex marginally in the green. Let's see if this lasts or if this builds on. The rest of the Asian pack, mind you, is actually trading very well. Bring up the mid caps and the small caps too. As we speak, the Nifty Bank already in the red. Bring up the mid caps and the small caps marginally in the green, about 0.5%. But it promises to be a volatile day of trade. For now, though, holding on to the green. The Nifty and the Sensex, in fact, 1/3% higher. A lot of green on the screen, very little red. So the newsmakers are in the red. Tata Steel, a stock in news. Coal India, the OFS, a stock in news. Dr. Reddy's, the Duvada plant, the news makes that one also in news. So 3 newsmakers, all 3 of them reacting negatively. What about the positives? Yes Bank about 3 percentage points higher. I don't quite see Tech Mahindra in the list of the gainers as yet, at least the top 10 or top 20, but must be somewhere. Tech Mahindra should be doing okay. IT by and large seems to be doing okay in today's session as well. TCS, Infosys, HCL Technologies marginally higher. Don't know if it's got to do with the currency as well, but marginally higher for these 3 names as well. Bajaj Finance about 1/4% or 0.75% in the green, and Indiabulls Housing Finance too trading marginally higher. But fair bit of green on the screen, not enough red, and well, strength exhibited by the markets for sure. On open, the question mark only is what are some newsmakers doing, because that's the only thing. Some result boys and otherwise, what are they doing in trade, because otherwise the start is not all that bad, Devina.
Neeraj, you were talking about Tech Mahindra, that's down 1.5% at open. But the other ones in the mid-cap space, to start off with some results that came out, we've got a Pidilite Industries. Profits were down 8.1%. So see if there's any result reaction on that one. 1.2% higher on the stock. Tata Global Beverages, Cummins India were a few other names that reported its Q2 numbers. Cummins India had a strong start in pre-open, 11% higher right now. Tata Global Beverages not so much. So IRB Infra Team Lease Services profits were up 43.1%. IRB Infra reported numbers as well. Net profits were down, stocks flat. Team Lease is up 1% in the session on those numbers. Torrent Power is the other one. Container Corp, Manpasand Beverages, net profit was down 6.7% for Manpasand. Let's see how that opens up for trade this morning. Manpasand is down 1.6%. Aside from that, Hindustan Zinc is down 6.5%. Wakrangi is down 5%. Imami down 2%. Crisil, Thermax, Jubilant Foodwork continue just to grind lower, but not a big heavy cut there, just closer to about 0.5% higher, lower. Dish TV is down, NMDC and Apollo Hospital are some of the other losers in trade today.
Well, okay, interesting. Let's just get in opening thoughts from both our experts. Gaurav, Bissa, the opening trade for you, and anything that pops up on your screen as well?
As far as the index is concerned, it's good that it consolidates around 10,200. One can then either sell a put option, as I mentioned earlier, or one can have a stop loss of 10,140 and buy on dips below 10,200, target of 10,300. As far as recognition concerned, IT space is looking a little bit interesting. So Mindtree would be one. One can keep a stop loss of 784, 782 on the upside. 820 can be seen.
Okay. What about? Okay. Sorry, Gaurav, you wanted to make a point? Okay, Chandan, your opening thoughts and anything that pops up on your screen as well?
Yeah, opening is per se, it's positive. So after the consolidation of last trading session, it seems that market could extend its positive momentum. We were looking at a major support of 10,138, but it's open positive, so support may shift even to 10,180 kind of zone. Upside, we are looking for an extended move towards 10,280, 10,333 next two trading session. Counter per se, however, the banking stocks may remain in a range bound. Some bounce could be sold again, but IT counter will be on focus. Positive on the TCS and Infosys, expecting both the counter to extend their positive momentum in the current trading session.
Got that. Gentlemen, we'll leave it at that. Chandan as well as Gaurav, appreciate both of you taking out the time and joining in. So nothing much, no great shakes on the market side at least. They're just about flat right now for the Nifty as well as the Sensex. But let's bring in Saurabh Mukherjee of Marcel's Investment Managers, who's joining us on the phone line right now. Saurabh, good morning to you. Obviously, the big news that everyone needs to, take heed of and probably address at this moment is what's been happening, with the government and the RBI. And what has your reading been into this, and how could this have its repercussions?
Look, these are exceptional circumstances, and exceptional circumstances call for exceptional measures. So I think some of what we are seeing playing out between the government and the RBI is a byproduct of the huge amount of liquidity that NBFCs and housing finance companies need over the next month or so. I think just between now and 10th November, the NBFCs and HFCs need around 50,000 crores because that's the amount of CPs that is rolling over. It's unlikely that the mutual fund industry will supply that liquidity to the NBFCs, which is where the banking system comes into play. The banking system is the purview of the RBI, and hence this clash of titans between the finance ministry and the RBI. So, exceptional circumstances, interesting circumstances. Let's see how things play out over the next 10-15 days.
At standpoint, Saurabh, what should market watchers be looking out for, and what are you factoring in terms of whether you change your stance or no?
Look, I've been saying the same thing for the last 12 months, that it makes no sense to have so much of your money invested from an equity perspective. It makes no sense to have so much of your portfolio in wholesale funded lenders, whether they be HFCs, NBFCs, or indeed the wholesale funded banks. Our system simply cannot justify this sort of valuations for wholesale funded lenders. The point of view continues. I think it's simply not feasible to believe that the NBFCs and HFCs can continue getting these massive amounts of liquidity from the wholesale market on a steady basis to fund assets which are anywhere between 5 years to 20 years in tenor. So you're borrowing from the wholesale market, you're lending very long term, and that asset liability mismatch is not tenable. You can buy these entities, but at valuations of well below price to book of 2 times. I think only one large HFC has reached 2 times. The rest of them are still trading at absurd valuations.
Saurabh, good morning. Neeraj here. And firstly, thanks so much for agreeing to talk to us on such a short notice. The news, Saurabh, that we have at hand is that Section 7 hasn't been invoked, but the government has issued letters to the RBI to initiate consultation under Section 7. That by itself isn't the most pleasing of news, right? That at such critical times, you have the government and the RBI at such great loggerheads that this act needed to be done in the first place. Does it make the money markets more nervous? Because I remember your comment on the policy day that if you were a trader on the overseas markets, you would essentially go on short the rupee and make merry. The rupee has started off weak in today's session as well, arguably bogged down by this news.
Look, I'm nobody to comment on whether the government has done the right thing or wrong thing
whether or not the signal that it gives to the market, Saurabh.
Yeah, but I think just focusing on the underlying challenge. The underlying challenge is we're funding our economy through wholesale market funded lenders, HFCs, NBFCs, and wholesale market funded banks. Our wholesale markets simply do not have the wherewithal to sustain this sort of funding on a non-stop basis for long-dated assets. So there's an underlying fundamental challenge. That challenge is going to come to the fore over the next 4 to 6 weeks, because massive amounts of CPs are gonna come up for maturity, and it'll be interesting to see whether the NBFCs and HFCs can replace the CP funding with something else. I can't see how they'll roll the CP over. I can't see how the mutual funds will buy fresh CPs. So clearly there'll have to be a replacement of that funding with something else. The logical something else, the logical new source of funding will be banks lending heavily to NBFCs and HFCs over the next 4 to 6 weeks. Will it happen? I think the jury is still out. And that's where I think the government versus RBI clash is so decisive. I think that's where the central bank, I think, probably try to exert a degree of restraint on bank lending to NBFCs and HFCs, and perhaps that restraint might prove to be challenging to practically exert.
Saurabh, if indeed the news were to come to the fore, you think there is a larger negative repercussion for the equity markets? Because I must add that the Indian market, I mean, not that you wouldn't know about it, but compared to the rest of the Asian screen or the global screen, Indian markets are fairly subdued today, arguably on account of this news flow.
I think again, for the last year, I've been saying Indian markets overvalued. The overvaluation is corrected somewhat, but I would say Nifty 9,500, roughly around there, would be fair value for the Indian market. And as you've discussed before, I think the rupee has got further to sink. So I would be cautious of the market as a whole. I would stay away from wholesale funded lenders. There is value to be had elsewhere in the Indian market, in IT companies, in pharma companies, in some of the export-related franchises. But wholesale funded lenders in India, precarious territory to be in for the last 12 months, precarious territory to be invested in even today.
From a market standpoint, sort of leaving this bit of news aside, and we'll come to it when it actually unfolds and how the market reacts to it then. But we're in the midst of the earnings season. So far, what is your assessment of the earnings season been in terms of the expectations beat, meet, and the ones that have not been able to match up?
I think it's been little below expectations. I don't think it's some radical. I don't think there are radical surprises there. But I wouldn't focus too much on the earnings season. I think H2 will look very different from H1. H2 will look very different from H1 because the funding crunch clearly is kicking in. You can see it in auto loan demand, cars, trucks, bikes, and as the funding crunch kicks in, we will see a more subdued economy in the second half of the year, which will obviously have an effect on earnings growth. So I wouldn't kill myself, parsing the Q2 numbers for some forward-looking cues.
But if you had to probably pinpoint a pocket which has surprised you on the positive side the most, which would that be so far from the larger ones that have already come out?
I think IT, said a year ago, IT looked very attractive. It's a good run. I think there's more to go in IT. There's more juice left in IT. We will see very pleasing results from the IT sector for the next 3-4 quarters. I think pharma as well. The rupee sliding is a big boost for the pharma sector. We'll see pleasing results there as well. And I think pharma stocks are overdue a substantial recovery.
Okay, Saurabh, just one final question from my end, and that is on something that I've heard now 2 or 3 fund managers start talking about. You're referring to financials in a big way. Is it now time to start looking at even financials from the bucket of retail versus industrials, and maybe time for the industrials or the corporate-facing financials to now come to the fore, as opposed to the retail-facing financials, which have enjoyed dominance for the last 6 or 7 years, at least, if not more?
I wouldn't draw a distinction between industrial, retail-facing. I think those are facile distinctions to draw. I think the distinction is: are you a bank with a strong CASA franchise? Do you have a strong liability franchise? Or are you a lender who relies heavily on wholesale markets? If you are the latter, your growth prospects will be limited in India over the next couple of years. If you are the former, you have a strong liability franchise, a strong CASA franchise, you will have good growth prospects in India over the next couple of years.
Okay, Saurabh, we will leave it at that. Thank you so much for taking the time out and joining us. Really appreciate your time. That's Saurabh Mukherjee of Marcellus Investment Managers talking about his thoughts on the markets, which are lying absolutely flat right now. What we'll do is take a break on that note. Must say, not too perturbed, still lying absolutely flat. And certain financial names, Devina, seem to be doing okay. Indiabulls Housing Finance and Yes Bank are amongst the two names which are actually at the top of the heap when it comes to the gainers, when it comes to the Nifty. But sadly,
should I also look at the smaller banks, because the last few days have been
couple of days at least,
good for them. So the likes of a Canara, Union, Bank of India, you know, an IOB, to see whether they have probably carried forward those gains from the last 2 days. So Canara Bank's up 1%, was up about 4% yesterday. Union Bank about 1% or so higher in trade. IOB, Bank of Baroda obviously on the numbers. IOB is up about 3% odd, so that stock seems to be active over the last few trading sessions, and Bank of Baroda too up about 3% odd.
Well, let's wait and watch. Take a break, come back with more on the other side.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, raise? अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, but पॉलिसी समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर जनरेशन की पसंद.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out there. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
right, back with Indian Open right here on Bloomberg Quint. Before we get into the corporates, the news at hand, the government has started a consultation process with the central bank under the Section 7 of the RBI Act, a provision that's never been invoked in the country so far. It's important to state here that no directions have been given so far. So what does this mean for the government-RBI relations? Ida joins us yet again with more details. Ida.
The context to this is, the speech given by Virulacharya on Friday, which invoked the independence of the central bank in an exceptionally strong fashion. And I think that had led to the question as to what has resulted in that speech. Remember, very clearly in that speech, he had stated that he had the support of Governor Urjit Patel in making this speech. Well, we now have a sense of what exactly has happened. What has happened is that almost a month back, it seems, the government has issued, quote-unquote, several letters to the RBI seeking consultations under Section 7 of the RBI Act. That's what a source close to the development has confirmed to us. We don't know the whole host of issues on which these letters have been issued, but prompt corrective action is certainly one of them. As we have been saying, and this is what our story on BloombergQuint.com says as well, that the section has not been invoked in the sense that no directions have been given under the section, but consultations have been initiated. Even at that level, it is a rare thing for the government to do. The government typically has a consultative process with the Reserve Bank of India. A consensus has been on a number of contentious issues over the years, but it looks like this time the differences seem to have become fairly extreme. Just listing out some of the issues where differences have been there, apart from the prompt corrective action framework, where 11 government banks have been restrained from growing their books very rapidly. That's the first point of contention. The second is the RBI's capital and the demand from the government for increased dividend from the RBI. The third is the payments regulator and the setting up of a payment regulatory system outside of the RBI. Those are just some of the issues in which these two bodies have gone head to head. That's the Finance Ministry and the government. And of course, the most recent addition to all of that is this NBFC stress, where the RBI seems to believe that enough has been done, but the government seems to feel that more needs to be done. That's the news that we have as of now. Any further developments will be reported.
All right, Ira, thanks a lot for that. And that is the top news that we will be tracking live for you. Coming back to the markets, almost at the high point of the day for the Nifty now. We gained by about 0.25% at 10,224. Sensex 0.25% higher as well. The banks, though, still just borderline in the red. Gains have come into stocks like Indiabulls Housing, Infosys, Yes Bank, Tech Mahindra, which have made a move of closer to about 2.5% in this session. Should pull up a Meghmani Organics and see how the stock has been doing right now. We're getting the management for you. The stock's up about 0.75%. They posted its 9% rise in revenues for the September quarter, while rupee depreciation has had a positive impact on the top line. Raw material imports from China may have put margins under some amount of pressure. To help us decode the numbers in further detail, joining us on the show right now, we've got the Managing Director, Mr. Ashish Soparkar. So thanks very much for joining in. Appreciate you taking out the time. If you could just first of all put the quarter gone by into perspective for us, at your end, how did you see it shape up?
Good morning. The quarter was relatively good, and we earned good money. The business was reasonably good. The drought was quite evident, but agro department also did well, and pigment also did well. And let me have a specific question for me to answer you now.
All right. So let's talk about volumes and overall realizations then.
The volumes are consistent as there is no additional capacity, or we are not able to utilize higher capacity. The volumes are consistent, and realizations are in line with raw material pricing. So our profits are also slightly better, relatively better than the last quarter or the corresponding quarter last year.
So what is the current capacity running at?
Agro is running at around 70% capacity. Pigment is running at around 75 to 80% capacity.
All right. Aside from that, can you talk a little bit more about the cost pressures this quarter, particularly on the raw material side, and also the rupee depreciation impact?
The rupee depreciation impact is, of course, positive because we export 75% of our production. For agrochemical business, we import a lot of raw material from China, and that because of China passing through undue environmental issues and not undue but highly pressurized environmental issues in China.
Okay, I think we just lost the management, if I'm not wrong. Mr. Ashish Soparkar, he was just talking to us, but I think we just missed out a small part of his answer. We'll try and reconnect that. But keep in mind, also important to figure out how they're planning to incur the capex of 640 crores over the next couple of years to expand its basic chemicals business. Keep in mind, with the cost of funding going up, it might be just difficult for some companies to incur large capex plans as well. So it'll be important to dissect all of that. And with the new capacities coming on stream for Meghmani, how are the next few quarters likely to shape up? So important to ask all of that. Okay, Mr. Soparkar is back. Mr. Soparkar, sorry we lost you. If you could want to complete the answer that you were giving.
Okay, for Meghmani Organics Limited, we are about to get new licenses, new permissions in 3 to 4 months, and then there will be a big expansion for Meghmani Organics Limited. The expansion cannot be quantified as of now, as we don't know in what phases we'll get the capacity expansion availability. But in Meghmani Fine Chem Limited, which is our basic chemical, we have a license to go for hydrogen peroxide. We have also got a license to go for chloromethane, the environmental clearance, not exactly license, but environmental clearance. So those all expansions are absolutely in line. We are also expanding basic chemicals, caustic, chlorine, and hydrogen for 470 tons per day to 800 metric ton per day. All capacity will be set up in the year 2019 to 2020. In 2020 to 2021, you can at least have 100% higher sales in Meghmani Fine Chem Limited. We believe from 600 crores per year sale in Meghmani Fine Chem Limited, we will be able to touch 1,200 crore in year after next year because of the additional capacity which we are putting up.
Right. For your agrochemicals business, obviously, the rupee depreciation has aided you. But in terms of the overall picture of demand, do you see that picking up as well? I mean, while you have received benefits of the currency, are you seeing benefits coming in from an increase in demand as well?
The demand all over the world is relatively stable, but the supply from China has considerably gone down. So that has reflected demand from India, in Brazil and in other countries. So India is benefited because Chinese supply has gone down. But at the same time, crude volatility, raw material availability, these two are little negative factors. But rupee depreciation has really helped promotion of exports, and we are looking for a very bright future as far as agrochemicals is concerned.
Mr. Soparkar, one final question. You have a capex of what, 640 crores over the next couple of years. With the rising costs of funds, is that going to be a problem to execute this within the cost structure that you had envisaged?
We are very lucky. We have tied up all our funds at the very, very economical way. All funds are committed by all banks at very, very minimum rate, practically without any spread on MCLR. And we don't feel that we will be anywhere pressurized for higher percentage of interest.
Well, touch wood. That is really good to know. Mr. Soparkar, all the best for that capex and new capacities coming on stream. Thank you so much for taking the time out, and look forward to talking to you again.
Thank you very much.
That's Meghmani Organics with their quarterly numbers. The next piece is on sugar, and as the ethanol blending program is gaining more attention from the center, a lot of companies are planning to double their ethanol capacity. I spoke to the founder and the erstwhile Managing Director of and Vice Chairman of Renuka Sugars, Mr. Narendra Murkumbi, on the entire space really, and not on Shree Renuka Sugars individually, and asked him about whether the current level of ethanol blending could increase next year as the Centre's interest subvention scheme will provide more comfort to sugar mills. He's spoken on the MSP and the importance thereof, the role that ethanol could play, and the global sugar scenario. Listen in.
So we continue to have one or two structural problems, especially with the fact that cane pricing is still decided by government. The fact that we have a structural surplus in India, which is not going away anytime soon. But beyond that, I think the next 1 or 2 years, the situation that is now emerging in the last couple of months seems to indicate a stable position for the industry. So I wouldn't say in any way that this is the start of a bull run, but definitely looks like it will be a stable 1 or 2 years going forward.
Okay, would large portion of this reason be global in nature, or do you believe the local factors? I mean, there is ISMA couple of days ago reduced the production forecast for the next sugar year as well. There is this whole talk of, or rather in fact, actual evidence of ethanol blending being raised, and maybe that leads to some diversion of sugar cane itself to ethanol instead of sugar and all of that. How are you placing all of these things?
To my mind, there are two major factors. One is that given the high oil price that has prevailed in the world market, I think Brazil has done an outstanding job of consuming more ethanol, and that has actually reduced sugar production there by about 9 million tons this calendar year. And that has considerably sorted out the global surplus. And in India, I think the biggest positive factor has been the strong support by the government. They have done two things. One is they have brought in price control. Now one might argue whether we should have those in a free economy, but it has stabilized the domestic price. The second thing is they have come out with a package of about 5,000 crores for export subsidies. Given where the world market is today and then the amount of subsidy being offered, I don't see any reason why the bulk of those exports don't happen. So that would reduce the surplus in India. The Indian crop is also now expected to come in at around 32 million tons. Earlier estimates were 35 million plus. So these two main factors, strong global demand for ethanol and the Indian government policy initiative, these are the two reasons why the sugar industry has stabilized.
Low production of sugar, both global and local. We heard things about Brazil, about India.
So in Brazil it is more due to diversion to ethanol, which is linked to high oil prices. The Brazilian gasoline price is now floating with the world crude oil price. And that means that when global crude oil prices go higher, automatically the ethanol demand goes higher. I think domestic prices are a function of the government policy. In India, there has been a very strong positive policy announced for ethanol, but it is not actually diverted too much sugar right now. That will require a lot of investment. I believe the investment proposals that which have come to the ministry are more than 6,000 crores already. And these are proposals for interest subsidies. So the government is giving an interest subsidy. Companies have to raise this money from the market or from banks. But given the amount of investment interest, in a year or 2 years, one could see a significant swing capacity being created in India as well, which could easily absorb between 2 and 4 million tons of sugar and convert that into ethanol. And given the size of our petrol market, this can easily be absorbed.
Okay. There's some messages floating around about how the last couple of months sugar prices by and large, though it might be seasonal in nature, but global sugar prices by and large have also done well because of this Brazilian issue. I think Thailand, the production has come off a little bit as well, and this India news as well. My question is there a case for a sustainable price on the global front being there, or is it too volatile to predict in a commodity like sugar?
I think we've seen the lows of the world sugar price for this cycle. Now, unless oil really takes a nosedive of $20, $30, I don't see us going back to 10 cents, which was the low of the world price. So there is a certain measure of stability there. We must remember that even with this recent rally in the world market, which has almost been 30% in a month, the world price is only about 23 rupees equivalent. It's only the subsidy announced by the Indian government which is bridging the gap.
Okay.
So while I don't see a very bearish trend, one is also not seeing a big shortage in the world market yet.
Okay, so I was trying to do some numbers, Mr. Murkumbi, and maybe you can help me out here. I thought let's work with an assumption that ISMA's forecast of 32 million tons for the next season that is starting turns out to be true. There's an opening stock circa about 6-7 million tons, so thereabouts.
It's about 10 million.
10 million tons. Okay, so that takes it to about 42, if I'm not wrong. And out of
42, yeah.
42. Yeah. And with an assumption that the production stays at about 25-26 million tons. Consumption stays about 25-26 million tons, and 6 or 7 million tons of export.
I would say about 4 to 5 million.
Okay,
that is what is subsidized. So visible consumption, exports are about 5 million. You'd say about 1 million tons max of diversion from sugar to ethanol through the bee molasses route, mainly in India, because government is giving a higher price for molasses for ethanol produced from bee molasses. So all told, you'll see another 6 million of disappearance. So we'll end up with the same opening stock as this year, which is about 10 million.
Okay. So how do the numbers then add up to make sugar as an industry, let's work with that assumption, sugar as an industry more viable? I mean, ethanol, great, it adds an additional revenue stream for the sugar companies, but sugar as a business by itself in the near term doesn't look like it will become viable, or do you reckon that it will probably happen in the sugar season which follows the current one?
No, so at the moment, as I explained earlier, the stability is brought by the fact that the government has imposed a minimum price. In the past, whenever you had inventories of this magnitude, closing stocks of 10, 12 million, the domestic price would dive by 30-40%.
Right.
In fact, we saw that last year before this current price control was introduced. Domestic price had gone down to 24-25 rupees. Now it is prevailing at the minimum price is 29, but the actual price is actually between 30 and 33 rupees ex-mill. So normally in a surplus, the biggest hit comes not from that additional production, but because the price dives on the entire production.
Right.
That has been mitigated this time by the price control. And that is why I expect numbers in general in the sugar industry to be better than in previous surplus cycles.
But it remains at the whims and fancies of the government.
It does. And that's why I said that structural problem has not been solved.
Has not been solved. Okay. Yeah. Now, just if you can help us make sense of this whole ethanol story, because I know you were at the forefront of this ethanol revolution many years back, right?
We built capacity too fast,
Well, let's put it that way. But now that there is some visible change, because I hear about tenders being put out as well, companies applying to the tender, even non-sugar companies getting orders from companies like BPCL, etc. How do you see that shaping up?
So I think this has been a record year. The oil marketing companies combined tender has attracted bids of over 300 crore liters, whereas I think the previous best was about half that amount. So clearly there is far more willingness and ability to supply. And from what I hear, about 50 crore liters out of these 300 crore liters is from bee molasses or juice, which are in both cases will reduce the amount of sugar produced. So already this year we could see between 5 and 7 lakh tons of sugar production reduced because that has been converted into ethanol. Going forward, I think if the capacity additions which are being announced and applied for, if all these are commissioned, and this typically takes 12 to 18 months, then in 2 years' time you could see potentially, if the price difference between ethanol and sugar remains like it is today in favor of ethanol, you could see a reduction of 2 to 4 million tons a year.
Okay. What makes companies do this now? I mean, in the past, there has been mandatory blending, quote unquote, of about 5%. The OMCs never took an lift off which was more than maybe 1% or 2%. And there were capacities in certain companies which were unutilized. Why is it that companies have a confidence this time around?
So clearly, government support is strong, both to save the domestic sugar industry and also is part of the overall self-reliance package on energy. So this is now also a component of that. Price incentive has never been as strong as this year. So if you produce ethanol from juice today, the oil companies are willing to give you 59 rupees, which is as good as producing sugar at 35 rupees or selling sugar at 35 rupees. So if you had the capacity today, you would actually want to produce ethanol rather than sugar.
But that's not the case.
That's not the case. But as I said, the pipeline announced, if that is implemented, you can actually, reduce sugar production by 2 to 4 million. And those who will do that will actually get an ethanol price which is the equivalent, as I said, of selling sugar at 35, 36 rupees a kilo.
As I understand, it's not necessary to make ethanol only from sugar cane. I think from grain as well, the policy is out there.
It's a lower price, but then you're talking of it only makes sense if it is spoiled grain, and there is a limit to how much of that is available. It's not available in the kind of quantity that sugarcane is.
So you would believe that the more viable way to play the ethanol story is also via a smart investment in a sugar company. People can do their analysis and choose what they want to do, but doing it via a sugar company is probably a more proactive way.
I don't think there are any big standalone ethanol players. Actually.
Any which ways.
Yeah,
okay.
Yeah. So one would look for someone who has a high proportion of ethanol to sugar, because that's where the delta would come incrementally. But coming back to core sugar profits, I think these are going to be positive because of price stability and an export of the surplus. So 10 million is still a relatively high closing stock. Ideally, you should be only having about 5 to 6 million.
True.
But since the pain is not there in terms of price declining, I think it is sustainable for the moment. Yeah.
Just humor me a couple of questions, Mr. Murkumbi, before we wrap. I was speaking to one of your ex-peers as well, Sakti Sugars, and I think that conversation led to me asking him about what does he believe the EBIT numbers for blended EBIT for sugar mill could look like now that ethanol is also firmly into play and this minimum support price. And he was saying that they were, I think the numbers that he quoted was that they, for their company, of course, and it could vary for different companies, but he said that we were negative about 400, 500 crores or thereabouts, circa those numbers for the previous year gone by, and that number could jump into the positive by a wide margin. Do you think the swing factor could be so high in the current year itself, not for Sakti, but for a standard mill which produces both sugar and ethanol? Do you think the swing factor because of these MSP and the ethanol pricing could be very high?
I have not thought about what effect it would have because of the MSP. I think if you look at the price where it went at the bottom, then obviously the EBITDA was deeply negative. But it didn't stay there for 2-3 months. Government intervened quite fast because of the cane arrears challenge they had, especially in Uttar Pradesh. But purely on ethanol, if you have a reasonable incremental investment in ethanol, which, so for example, instead of converting all your C molasses into ethanol today, if you were able to convert at the B molasses stage, which effectively is doubling your ethanol production, you should be able to add about 5 percentage points to your EBITDA structurally. And in a kind of bearish environment, it would also be more stable than actually having more sugar exposure.
Okay. Yeah. One last question, really. You look at the agrarian economy very, very closely. There was a lot of talks about some pesticide impact on sugarcane production, the rainfall impact as well. How do you think all of that has played out in the season gone by?
Yeah, so we have a white grub problem in parts of Maharashtra. At the current moment, it doesn't seem to be a significant factor in more than 2 or 3 districts. What is more worrying is that the eastern part of Maharashtra and Solapur district in western Maharashtra have had a very poor second half of the monsoon, and there is water stress. And this has 2 effects. One is yields in the current crop are lower. So the reduction in crop estimates for this year, which is also just kind of validated yesterday, are largely due to expected reductions in yield in Maharashtra and Karnataka. Also importantly, I think in some of these districts, especially in eastern Maharashtra, you will see less planting. So I would say today it's a very early moment, but if I were to take a bet, I think the next crop in India will not be 32, it will be lower than 32. And we are hearing similar noises out of Brazil. The next crop is going to be lower. Rainfall in the first half of the year was not enough. Secondly, the mills are generally in bad shape, and the planting or replanting that has to be done for sugarcane is not up to the optimum percentage. So overall, that crop could be lower. If oil prices stay high, then ethanol would be the first priority. So sugar production in Brazil also could drop by a couple of million. So between India and Brazil, you could see like another 4 million reduction in the 1920 sugar year. That's why I'm saying it looks like we now have the condition for 2 years of stability.
At least. Hopefully it can extend further as well.
Well, I think this is a great moment, and the election will have been completed by May next year. It will be a great moment actually to take a look at the cane pricing system in India. If we always postpone that discussion to the crisis, it's never a good time during a crisis to reform cane price. But if you have stability, then whether we can move more comprehensively to a revenue sharing formula while protecting what minimum price the farmers still have today, maybe that is the time a year down the line, when you could actually shift to a true revenue sharing formula, which would give it long-term, really long-term predictability and stability.
Is there a way which it can be done in a politically correct fashion as well? Because I believe a number of times these decisions fail because the person sitting on the hot seat doesn't want to, get involved in a political hot potato.
Well, until farmers and farmers associations feel that they can pressurize governments, whether central governments or state governments, to intervene in pricing, I think that pressure will continue. But as long as you protect current minimum prices, we are not asking for that to be totally dismantled. I think these are bearable now. Whatever it has, with all the increases that have been done in the last 7-8 years, which have been substantial, more than 100% in the case of the FRP. It can be bearable in the future, provided there is no further increase.
Okay.
So what is needed is actually probably political will, not to dismantle it, but to at least keep it at current levels and push any further increment in the price to a revenue sharing formula.
Got it. I have one last question, Mr. Murkumbi. For the last 10 years, we've seen this, that sugar millers, despite their right appeals for looking at the economic case of sugar production, cane pricing was never an issue that was in favor of the sugar millers. That, of course, led to arrears and the farmers not getting paid, etc., etc. But if indeed sugar millers come back into the black and make decent profits because of the ethanol and the sugar story combined, is there an outside risk of farmers demanding a higher price for their cane produce, which might play a spoil sport to what is looking like a bit of a recovery?
I think even now you are seeing demands at the ground level, both in Maharashtra and Uttar Pradesh, for a higher price. That always happens. I don't think at the moment either government is in the mood to increase the price, because it's with great difficulty that they have now cobbled together a system where they have a reasonable chance that arrears will be reduced, going into the election season.